Assalamualaikum warahmatullahi ta'ala wabarakatuh. Before I start, I would like to introduce myself. My name is Muhammad Shafiq bin Muhammad Shafri. Today, I would like to share with you guys about fundamental analysis. Fundamental analysis important to investor who want to invest in market. Before they start do an investment, they need to do a analysis and research. For example, like fundamental analysis and technical analysis. But today, I just want to share to you guys about fundamental analysis first. Fundamental analysis is a process examining uh, a company financial statement to help investor decide if this a stock is a good investment or not. Alright, fundamental analysis, it can be divided into three uh, important part, which is economy analysis, industry analysis, and company analysis. So we will go through one by one. First, economy analysis. Economy analysis is to determine if overall conditions are good for the stock market. The performance of company depends on the performance of economy. When the level of economic activity is low, the stock price will be low. If the economic activity high, the stock price will be high. Alright, when we talk about economy, it closely related with GDP, inflation, and interest rate. Okay, now we will talk about GDP first. The higher GDP, the better economy, because manufacturing, service of product, electricity, and others are increasing. It also lead to increasing in purchasing power. So investor need to analyze previous year and make a prediction for the next year GDP to invest. Next is inflation. The higher rate of inflation in economy, it will affect the performance of economy. So investors need to analyze monetary and fiscal policy to know how they control the inflation. High inflation will affect the real GDP. Last is interest rate. Interest rate determines cost and availability of credit for company operating. Low interest rate will encourage investment. It will implies lower cost of finance and gain more profit for the company. We move to industry analysis. It refers to an evaluation of the relative strength and weakness of particular industry. An industry, it is a group of firms that have similar production and produce a similar product. Investor need to analyze either the industry is doing well or not. How the price for the every industry that they want to invest. There are several factors to be considered in industry analysis, which are the first one is the growth of the industry. If the industry keep growing, it shows the industry is in a good conditions. Next is cost structure and profitability. Investor need to know the cost to enter the industry, and the lower the cost, they will gain a better profit. Last is nature of product and competitors. Investor need to know how the competitor are doing so they can figure out to overcome them. Last one is company analysis. Company analysis, it is where the company give informations that investor needed to know how company business is doing. The informations can be divided into two parts, which is the first one internal, which is like annual report, financial statement, and others. And the second one is the external information, where informations that can generate from outside the company, like competitors. Now, let's talk about financial statement. It is a useful tool to get an information for investor to know how the company is doing. Financial statement can be categorized into three, which are the first one is income statement, balance sheets, and cash flow statement. Okay, let me go through one by one. First is income statement. Income statement, it is a statement or document that help investor to know how company earns money. In income statement, it show company revenue and expenses. When we subtract the revenue and expenses, we can get the net income of the company. Net income, it is a earning of the company. There are two ways to handle the net income. The first one, it is pay dividend to shareholder, and the second one is reinvest in the company for the purpose to gain more profit. Next is balance sheet. Balance sheet give information to company to compare the company current assets to its liability and equity. Asset. Asset, it is a thing that company own, like cash, equipment, property, machinery, and others. Liability is usually a debt that the company need to pay. And equity, it is an amount of asset raised by issuing the stock. Where this balance sheet document help investors see how company raise money for its asset and help determine if the company overextended or not. Next is cash flow statement. It is a document that shows how the company use its cash to operate business and make an investment. It is also show how much the company make a borrowing. Alright, usually investor will get information from those documents and make a ratio to analyze the company. There are several ratios that investor will use. We see which are the first one is price earning ratio, price to book value, debt to equity, return on equity, current asset, current ratio, and net profit margin. Okay. So, for example, I give like a price earning ratio. If the higher price earning ratio, it show market is willing to pay the stock. If price earning ratio is lower, it indicates the stock price is cheaper. So, if investor will make a decision either want to buy or sell based on the ratio that they calculate. Alright guys, that's all from me for today. This is the video about the information about the fundamental analysis. I hope it is a useful to you guys. So don't forget to hit the button like and share. Thank you.